Limited. Thank you, and over to you, sir.
Thank you, Michelle. Good afternoon, everyone. On behalf of Phillip Capital India Private Limited, we welcome you to the Q1FY24 call of Heidelberg Cement India Limited. On the call, we have with us Mr. Joydeep Mukherjee, Managing Director, and Mr. Anil Sharma, Chief Financial Officer of the Heidelberg Cement India Limited. I would like to mention on behalf of Heidelberg Cement India Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments and the current performance. These statements are subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. Heidelberg Cement India Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, Heidelberg Cement India Limited has uploaded a copy of the Q1FY24 investor presentation on their website and the stock exchanges. Participants are requested to download a copy of the presentation from these websites. I will now hand over the floor to management of Heidelberg Cement India Limited for the opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, Joydeep, sir.
Thank you very much, Vaibhav, and I welcome everyone on the call to this session. I shall start with the key messages that we have, and our key messages for this call are that we have had a volume growth of 8%, and we are at a 75% capacity utilization for this quarter. We continue to provide 100% blended cement, and we are, as of now, not manufacturing any OPC at all. Our share of green power has increased to, I'm happy to report that it's increased to 33%. And this is looking very good, and we also look forward to improve on this. Our alternative fuel today is at 6% of our total fuel mix, and we have, obviously, as you know, from the document which is provided to you, an EBITDA of 772 rupees per ton, which is 10% growth minus year on year. But if you take like for like and take out the sales tax benefit impact that we had, it is about minus 3%. Our net cash and bank balance stands at 4 billion Indian rupees, and we are continuing to operate on negative net operating working capital. Moving on an ESG overview, as I already mentioned, we are at 100% blended cement. On CO2 footprint, we are at a number of 504 kg per ton of cement, and this has been a continuous improvement. If you look at CY20, we were at about 519 kgs, and that has now come down to 504 in CY23. On water positivity index, we are at 6.9x. We touched 25,000 plus lives through our CSR initiatives, and as mentioned, we are at more than 30% green power, actually currently at 33%. Moving on to the CSG footprint slide, which has been shared. As we said, that our green power right now is at 33%. We have an ambitious target to cross 40% next year. At Jhansi, we have a long-term agreement of 15 megawatt solar power supply. At Narsingar, we are operating through a 12 megawatt waste heat recovery plant and 5.5 megawatt solar plant. And Amasandra is consistently operating at more than 90% green power. This is something which we are pretty proud of, and we would like to focus on this going forward and continuously increase our green power percentages of total power. On our CSR initiatives, we cover a wide spectrum of initiatives. We do work with government school students to whom we have distributed educational kits. To hospitals, we've provided air purifiers and renovated government primary school, Pali Pahari, and also we involve ourselves in a lot of skill development training. around our plant, we have communities with whom we have to involve them and execute these activities. Moving on to the operational and financial performance. As you can see, our revenue is up by 4%. On operating expenses, 1.6%, and EBITDA stands at minus 2.3% over the corresponding period. On sales volume, we are up by 8.2%, though realization is down by about 6.7%, but we managed costs well, and cost also looks healthy at a 6.1% lower number. Moving on to the EBITDA bridge, June 23 quarter, like-for-like EBITDA per ton. So we have come down from 865 in June 22 to 772 in June 23. There was a significant element of, so this is a 10% drop. But if you take out the impact of the incentive that we had, which was sales tax incentives, it is actually a 3% drop. We lost about 298 rupees in price, and raw material impact was, if you look at it, around 26 rupees per ton. However, on power and fuel, we had an advantage of 334 rupees. Freight, we had a negative impact of 62 rupees per ton, and this was primarily because in this quarter, like in the earlier quarters of the corresponding periods, we did not have the railway freight incentives. And there's been a very marginal increase of around 10 kilometers in 7 or 10 kilometers in lead. And that's the explanation of the EBITDA bridge. On our cash and bank balances, we have this is billion. And our bank balances on 30th June is 6103 million, and net cash is 4093, and we have 2010 million in debt. And we have a comfortable repayment schedule, so there is really nothing to comment on that. On the June 23 quarter share of volume, we have 45% road dispatches, which is kind of flattish over the corresponding period. 6% is our AFR, as we mentioned before, which is up by 3% year on year. And premium products that we sell in the market constitute of about 30% of trade volume, which is again up by about 8% year on year. This obviously provides us better realization and better brand equity in the market. And out of our total sales, we are at about 82% trade sales, which is again about flattish as compared to the similar period. So we are moving on a strategy of increasing premiumization, and we are optimizing the sales mix. On the outlook, we have the Lok Sabha elections in 2024, and therefore we do expect rapid execution of infrastructure projects. We are also noticing very strong traction in rural affordable housing segments and real estate. But of course, competition is intensifying with new capacities, and specifically around our plant also, we have seen new competition come up. They're very aggressive. We anticipate that the fuel prices, which have softened considerably, and this trend would continue. We see inflation getting under control, and at the same time, we do have elevated interest costs. On the crop, we see that the Rabi crop had a good start. However, there have been a few unseasonal rain episodes here and there, which might lead to slightly lower output. So that's all I have on my opening remarks. And Vaibhav, it is over to you right now.
Sir, shall we open the floor for the Q&A session?
Yes, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Just a moment.
We have the first question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, before asking any questions, the point says last quarter we did not do the con call and no presentation. So needed a couple of data points for fourth quarter FY23. Trade share, share, lead distance for last quarter and for this quarter.
You're not very clear. We lost you for a while.
Can you please repeat your last line, please?
Yeah. Sir, I am saying I need a data point for fourth quarter FY23, trade share, road share, premium share, lead distance for this quarter, Q1 and fourth quarter, and the fuel mix for this quarter and the last quarter, fourth quarter.
Yeah, that's a long list, so we have to go one by one. Which one was the first part?
Trade mix was 80% in the March quarter, so we can say almost flattish as compared to March quarter.
22.
Yeah, so and then the premium product in March quarter was around 32%. So in this June quarter it is around 30%. So road mix almost similar, 45% road, 55% rail. And with respect to our lead distance, we don't think there is a major increase or decrease.
So what's the number lead distance for this quarter and the fourth quarter?
So this quarter it is 361.
Okay.
And what was it last quarter?
Last quarter, Q4 FY23, was it the same 361?
351. Yeah. So as I mentioned in my opening remarks, it's increased by about 10 kilometers.
Okay. And fuel mix for this quarter and the last quarter, Q4?
You want the fuel cost or fuel mix?
How much was coal share and petcoke share for this quarter?
Coal again is about flattish. That's around, it was 32%, which is now 33%.
Okay, this quarter is 33%. So now the main question is, sir, on the volume front. So after a 6 quarter of degrowth, this quarter we definitely grew 8% plus. But even if I look at on yearly basis, since I would say FY16, we did a 4.4 million ton, and FY23 also we did a 4.39. So on from 7-8 years perspective also, actually we did not grew, and we actually kind of lost our market share. So 2-3 aspect on that front. So how much volume are we looking for this year FY24? Second, in terms of the expansion plan, so I think Q3 FY23 we had talked about 0.3 million ton grinding and 0.2 clinker debottlenecking to come up in FY24. So what's the status on that? And going forward in terms of the long term, we had a plan of Gujarat expansion of 2 million ton clinker and 3.5 million ton grinding that likely to come in FY27. So is it the same stand, or is there anything which can come up early?
No, we do have a debottlenecking exercise which is going on, and that exercise would be over by 2024 December. And this is in our central Damoh area, and that's going to give us about 200,000 tons of cement.
Slightly brilliant.
Yeah. So that initiative is pretty much on. And as far as Gujarat is concerned, as we mentioned, I think the last managing director, Mr. Jamshed Cooper, has also mentioned in his last call that we are now awaiting the environmental clearance, and post environmental clearance we shall start other necessary activities. But there is no material change from what was stated last time.
Okay. And this debottlenecking, so the grinding capacity will increase by 0.3 million ton and clinker by 0.2 million ton.
Yeah, we are trying to reach to that level.
Okay. And in terms of the kcal cost, the kcal cost for this quarter, last quarter, and how do we now see in terms of the overall cost to come down in the next quarter? And let's say if the prices remains at so for FY25, how much broadly we can see, because it will in terms of the reduction from Q2, Q3, Q4, but overall if somebody looks at from FY25 perspective, so from FY23 to FY25, if the current prices coal petcoke remains same, how much one can see in terms of the reduction in the power and fuel cost?
Okay, in Seven we are talking about it is far period with respect to projection, but everybody knows that the fuel prices, especially petcoke, have started reducing, and during June quarter the major benefit came from the petcoke reduction, and hopefully this trend should continue. So in the coming quarters, especially September and December, there must be some further benefit on account of petcoke price reduction.
So how much that would be?
To comment on what is it going to happen till 2025, because that depends a lot on the global situation, on demand supply, on our own initiatives to augment AFR in our kiln, and there are just too many variables to give you a real meaningful insight into what's going to be the numbers in 2025. But what we can tell you is that we do foresee that at least in this quarter and the coming quarter, the fuel prices, the input cost, which is what we are trying to talk about in fuel, shall show a further softening.
So how much reduction can we see? So what was the kcal cost in 1Q FY24 and % reduction in Q2 and the same way reduction in Q3?
Sorry, no, this one. You are asking which period, please?
This quarter, what was the kcal cost? And in Q2, how much more reduction can we expect? And Q3, how much?
So this quarter it was 2.01.
Okay.
You're talking about coal cost per CV, right? Yeah. So this is coal per CV, and petcoke was 2.38 this quarter. Now, if you look at last quarter, coal was 2.30 and petcoke was 2.77.
Okay.
Yeah. So already you can see a good 15% around that benchmark number reduction. And while our view is that coal going forward in the next couple of quarters will remain flattish, we do anticipate a further reduction in petcoke.
Last year pricing, how much have you seen any price reduction in July, and any further price likely to happen in remaining months of this quarter?
What prices? Cement. You're talking about cement prices?
Yeah.
Cement prices traditionally in this season are always under pressure, and in our relevant market there are obviously a lot of rains, etc. So yes, right now as we see, the prices are under pressure, but it's nothing alarming. I mean, we see similar trends as last year, and this typically goes back and is gained as the rains abate. Okay, that's what the history has been. But right now, we don't see I don't see any reason for alarm.
Have you seen a 5 rupees kind of a reduction from the average of Q1 FY24 in July?
Yeah, it could be in that ballpark, yes.
Okay. Thank you. All the best.
Yeah.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and one on their touchtone phone. We have the next question from the line of Sanjay Nandi from VT Capital. Please go ahead.
Yeah, good noon, sir. Thank you for the opportunity. Just would like to know one.
A little louder. We can't hear you very clearly. I'm sorry.
Can you hear me, sir, right now?
Yes, please. Yes, go ahead.
Yeah. So we could see some significant drop in your power and fuel cost in this quarter. So can you please guide us what kind of drop can we expect in coming half part of the year? Like as you mentioned, that things are softening down. So if you can give some guidance in terms of cost pattern, what we can expect in next 6 months or next 2 months, it will be very helpful.
I think we don't want to give this kind of guidance because we don't know what is going to happen. But
Correct.
At this moment, as we speak, we can say there is some maybe further softening of the domestic petcoke, and the coal prices are more or less flat in the June quarter. So this is at this moment we can say about the fuel price movement in the coming quarters.
Got it. Also, you mentioned a lot of capacities are coming in your areas of operations. So can you please mention or specify some of the companies that are coming up with some significant capacity in your areas of operations?
Yeah, so Dalmia has already taken over the JP assets, which were not operating in our area. So that is going to hit our market. And JK Cement has already started their operations around 100 kilometers from our plant.
Okay. So what is the pricing difference between us and those guys previously selling, like Dalmia used to be JP used to be an old plant. So what price they used to sell and what price we are selling in that market, sir?
So this is a very difficult question to answer because there's no one answer to this. It will depend on market to market.
So what is the
cement pricing changes every district and even in parts of districts. So it will be unfair for me to tell you that we have 5 rupees higher or 7 rupees lower because it's not really the same situation in every market.
So got it, sir. But in the central part of the country, sir, where we are operating mostly, so which grade we are catering in that market? Is it a B grade or it's in the mid of AB grade?
I mean, there are markets where I sell higher than the so-called A grade cement manufacturers in India. And there are markets where I'm lower. So that's why I'm saying it's very difficult to answer that question. The answer would lie, if you can see the annual results of the company and see the gross price, then you will be able to get an average. But as I said, that typically, in your home markets where realizations are higher, every competitor would come and try to push down the price. And in certain markets, you have an advantage which is not the same for another competitor, and there you can hold a higher price than them. So I would not get into a classification of A grade pricing and B grade pricing. It doesn't work like that.
Got it, sir. So just clarify me, apart from this Dalmia and JK, are there any upcoming capacities in those areas of operations in central India, or these two are the major things?
No, there was the Ametha expansion of Adani, which is there, and in our tertiary market, somewhere near Agra, where any which ways we don't sell much, there is expansion.
Right. Got it, sir. So we could also find some spike in our raw material cost. Is it because of some spike in the fly ash pricing? So if you can kindly throw some colors on that fly ash pricing trend on a QOQ basis, would be very helpful.
So the raw material prices, if you see during last 1 year, because of the weakening of the Indian rupee, there is increase in the gypsum cost, as well as the gypsum cost has increased because of now maybe exemption of peak season surcharge by the railway. So that is also the reason the cost has increased. We have been consuming fly ash, we have been consuming the sweetener, so to some extent the raw material prices have increased.
So, sir, what is the current prices of fly ash in per ton basis, sir?
Fly ash we used to have a blended cost is around 650-700 rupees, and the fly ash cost almost remains same because we transport fly ash by road. And the major part of the fly ash landed cost is the transportation cost.
Yeah, I mean, that's also a mix. One tends to draw from different sources. So depending on from which source you are buying in a particular month, it varies.
I just need average price. So you're talking like 650 per ton is the fly ash average cost, right?
Yeah.
And what about this gypsum thing, sir?
Gypsum we consume in the imported mineral gypsum. And that is around...
If you can guide us with the cost per ton, like in prevailing current...
Around $2,200, $2,300.
$2,300 per ton. Got it. Okay, so thank you, sir. That's on my side. We'll come back in a queue. Wish you all the very best.
Thank you. Anyone who has a question may press star and one. The next question is from the line of Anuj Kapil from Taurus Mutual Fund. Please go ahead.
Good afternoon, Joydeepji, and good afternoon, Anilji, and congratulations on your quarterly results. The profit pats are up above 50% as well. So my question is, you are having a cash of around 400 crore rupees. So are you looking to increase your capacity to like currently you have around 13.4 MTPA? Are you looking to increase your capacity by around 1700 or 17 to 18 MTPA?
So our total capacity is 6.25.
Yeah.
You are talking about the group total capacity in India, that is 30 million tons.
Yeah.
And this 600 crore rupees, you rightly said that 200 crore rupees is we have the debt in books, and it will be repaid in coming 2 years. And at the same time, if you have seen the last board, after the board meeting, our intimation to stock exchange that we are bringing before the shareholders for approval of the dividend of 7 rupees per share. The total amount is around 150 crore rupees. So if the shareholders approve it, then thereafter we will distribute the dividend out of this cash balance. At this moment, we are trying to put this money for our existing ongoing capex on account of alternative fuel, and also like we have also shared with you about our ongoing debottlenecking project, and we have estimated the total capex required in coming 15 to 18 months on that project is around 70 crore rupees. So that also we are going to use our internal.
Obviously, there's 40 to 45 crores of regular capex. Maintenance.
But having said that, we are always exploring possibility to increase our capacity. We are trying to expedite Gujarat one, and these internal accruals, especially our homework, we think that some of the internal accruals will be used for the capacity increase, and some maybe in future then we need to borrow a little bit for the project.
That's great to hear, sir. Thank you so much for your answer, sir. That's all I have.
Thank you.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Good afternoon. First off, my first question pertains to your volume growth strategy. We have seen volume growth for past 4 to 5 years, and now in your market there is intense competition from existing players plus new entrants. So what is your thought on volume for this financial year? What sort of volume growth you are looking at, and what strategy are you adopting to drive that volume growth?
So we have several initiatives in the market. I mean, if you ask about strategy, we are obviously looking at where we are not present. We have a clear premium, and looking at covering those markets. We are looking at a very solid premium product strategy, which is already doing well in certain markets. So depending on core markets and growing in profitable markets are basically the focus areas.
Okay, so do you see that you have a case or you have a tangible case of delivering 7-8% volume growth in FY24? Is that a possible number we are looking at?
As of now, sorry, your question is for the entire year?
Yeah. For full year FY24, what sort of number you're working with in terms of growth?
We are certainly looking at a 7-8% volume growth.
Okay. And could you also share your power cost, consumption cost per, in rupees per unit, which you had in Q1, and how are they faring with the coal prices coming down?
So the power cost has been flattish. It's been about 6.6 rupees per unit.
Okay, and this is
6.7, but that's flattish.
Okay, 6.6, 6.7. So, now your green power mix has also increased. So how is that, what is the average cost of your green power? I assume a good part of that you're sourcing it through, some JV, where the cost would be around 4 to 5 rupees?
We would not be in a position to give you an exact number, but yeah, it's significantly lower than grid power.
Okay. And do you see this power cost number also coming down with the fuel prices coming off in subsequent quarters? 10-20% sort of reduction. Is that a possibility?
Are you talking about grid power?
Yeah, your average power cost, the 6.6, 6.7 in by say Q3 or Q4. Do you see a case of this number coming down to around 5.5 rupees?
No, not yet. No. We have initiatives in place which will start yielding fruit possibly next calendar year.
Mm-hmm. Okay.
But you will appreciate that the grid also has been increasing their price. Like the other states, Madhya Pradesh and Uttar Pradesh, they have also increased their prices, and generally we see there is 5 to 7% every year they try to increase the grid prices. Our target is that whatever grid prices increase are there, we should get at least offset by increasing our renewable power and try to keep the weighted average of the power cost remain in the company.
Okay, understood. So even if you're able to maintain the cost, that is also a good strategy given the inflation at the grid side. And lastly, on the other expense, what led to this Q1Q fall in the other expenses, which are down almost 8 to 9%?
So other expenditure, there are a mix of few things. Fixed cost is there, like the salary cost is there, then the rent, and then maybe the curling, maintenance, repair, and some of the semi-fixed costs are kind of things like stores and spares and consumables. And those expenditure, you might have noticed that quarter to quarter, sometimes 10% plus, sometimes 10% minus, depending upon our kiln plant shutdown. As well as that, depending upon the various, maybe the initiatives on account of brand building and advertisement. So during this quarter, when we compare with the last March quarter, slightly it is reduced on account of lower repairs and maintenance costs.
Okay, sir, great. That's all from my end. Thank you. I'll come back in queue.
Thank you. The next question is from the line of Mangesh Padang from Centrum Broking. Please go ahead.
Good afternoon, sir. Sir, a couple of questions from my side. Firstly, wanted to understand.
I'm sorry to interrupt. Sir, your audio is not clear. Your voice is breaking.
Just a moment. Hello.
Please proceed.
Yes.
Hello.
Yes, sir.
Yeah, go ahead, please.
Okay. Sir, a couple of questions. First is on the capacity. So I just want to understand, is there any constraint for us to go or sell more volumes beyond, say, 5 million tons, even though we have 6.25 million tons of capacity? Because for many years now, we have seen that our volumes have remained below 5 million tons. And secondly, even if, when I see across markets like JK Cement came up with a plan and have achieved a significant utilization in the market wherein we operate. And now we are going to see a Vita ACC coming up. So do you think we can, irrespective of the city, bring us back?
Oh, you're breaking up once again. I'm sorry. You're breaking up once again.
So the question was whether any capacity constraints are there which restricts us getting bigger at 5 million ton volumes.
Is there any capacity constraint to reach 5 million tons?
No, there is no capacity constraint to reach 5 million ton. I mean, it's a market situation, and our strategy is in the market, which is going to lead to an increase in the volume. So it's not like that there is any problem in the plant or anything like that. We have a 75% utilization, which is maybe about 10 odd % lower than where I'd like to be.
And sir, I wanted to check what kind of utilization we will be at.
Sorry, your audio is breaking, sir.
Hello?
Sir, your audio is breaking. Can you join the queue, please?
This is not the question. He's saying it's 74.8.
Is that better now?
Question is that? Yeah.
What kind of utilization we will be at there?
I have not understood the question. Can you repeat it once again?
The Karnataka plant, sir. Karnataka plant, what would be our utilization?
Karnataka plant is very small. Our capacity there is around 400,000 tons cement, and we have been running similar to what the other South India plants are running the capacity.
Yeah, and sir, I'll just ask you the last question. So, as you mentioned, in fact, other participants also mentioned that competition probably should increase given the capacity, the expected capacity additions to Dalmia, ICC, JK Cement. How do you see pricing behave in that market, sir, from here on? Do you think that it could have a negative impact on it?
Pricing would be under pressure, yes. No doubt about it.
Okay. And sir, now the 8% growth that we have achieved.
Any market where there is a expansion, it's also limited for a period of time.
Right.
See, there is very healthy growth in cement demand in our relevant market. So yes, for some time the pricing would be under pressure.
That was the question. So I just wanted to check. You think that the incremental demand would be able to absorb faster the capacity addition and won't have the?
I think so. I definitely think so.
Yeah. Okay. Great. So great. Thank you, sir.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Hello. Yeah, good afternoon, sir. My question is to Joydeep, sir. So since it's taking over, what has been your...
I'm sorry to interrupt, sir. I would request you to kindly use your handset to ask a question at this time.
Is this able now?
Yes, sir. Please proceed.
Yeah. Joydeep, sir. So since you're taking over, what has been and probably what would be your key focus areas in near to medium term on market share, market positioning, target premium segment mix, or merger with Zuari Cement? Are there any material changes directionally versus the erstwhile leadership? Some of these questions were answered partly, but
I think these are very generic questions. Obviously, I can't discuss and can't explain my entire strategy in 5 minutes over an investor call. But it is very clear that the focus areas would be on improving efficiencies, capacity utilization. Those would be, the top of my mind initiatives. And as far as Zuari is concerned, we are looking at it. We'll certainly move when the time is opportune. That is something which is in our radar, but the timing has to be right. And I can't give you an exact time when we shall move on that, but that's definitely something which is in our consideration.
But any specific reason which could be holding it back related to Competition Commission or your parent approval or what?
There is no Competition Commission related issue as of now. That's not the reason. We'll have to see what is the right time to do this merger. which would benefit us as a company and also be of benefit to the shareholders.
And is the other company also like looking for any growth in terms of capex? If you can suggest so.
Unfortunately, I would not be able to discuss strategy of Zuari on this call. This is regarding our listed company, which is HCIL, and I would appreciate if all the questions are limited to this operations, please.
Sure, sir. These are my questions. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this would be a final reminder, and no further reminders will be announced. Participants who wishes to ask a question may press star and 1. The next question is from the line of Devesh Agarwal from IIFL Securities. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. My first question is, could you also share the number of the incentives that you would have earned from Damo plant in the fourth quarter, the way you shared for the last quarter?
So in fourth quarter, this March quarter, the incentive was applicable for 1.5 months, and the total amount was, I think, it is around 3 crore rupees.
Sorry, sir, 3 crore.
3 crore.
Yeah, but that's over.
That's over. That is March quarter.
We had the benefit only for 90 days in the quarter.
Understood. And sir, incrementally you said that possibly this year you would target a growth of 7 to 8%. So do you think that's like an inline industry growth for your region, or it's really slightly lower than the industry growth for the region, Central India?
Across India, the outlook is that the industry would be growing at that kind of percentage. So if you talk about what is our position on that vis-a-vis competition, it will be a difficult question to answer. The reason being that we are pretty much operating in those Central India 2-3 states, right? Whereas when you look at our competition, you look at all the big names, they are spread across India. So I will not have any visibility on what exactly their growth would be in our relevant region. But if I would hazard a guess, I would say, yeah, we should be pretty much in line.
Okay. Now I was trying to understand, sir, some of the competition who have just started plant there are seeing a very fast ramp up. So in that regards, I would assume that we may be losing some market share to them. So in such a scenario, would we focus more on improving our EBITDA per ton through different means? And if that is the strategy, what would be those factors that could help us to improve our EBITDA per ton if we are not able to grow our volumes in comparison to what our peers would be able to?
No, I mean, there are people who have set up companies who have set up plants, right? And they would obviously ramp the plants up, the volumes up as soon as they can. If you look at our sales mix in trade and non-trade, we are pretty much focused in trade, as is evident from the numbers that we've shared, right? So we do believe that in the trade retail segment, there is enough and abundant scope for us to grow. There are strategies employed by certain companies who focus on non-trade growth in the infrastructure segments, etc. That's not a segment in which we participate because that's primarily OPC. Okay, so a lot of these new plants are selling OPC to the non-trade segment. That's not a segment in which we operate at all. So if your question is, are we comfortable looking at the future in the segment that we operate? The answer is yes.
No, I also wanted to understand if we would be focusing more on the profitability and not only volume. And to that extent, we will only focus on increasing our premiumization or possibly reducing our cost. Will that be the key driver for the management?
No, we are also, that's obviously one of the key drivers, which is always improving profitability. But as we mentioned, we are also looking at a 200 KT expansion next year, right? So it's not that we'll only be talking about profitability. Volume and pricing and cost are obviously the 3 points of a triangle which needs to be managed in a cement business, and we are going to try and do that to the best of our ability.
Understood, sir. Thank you so much.
Yeah, it's not that it's only going to be focus on EBITDA improvement and no focus on volume. No, that's not what we are saying.
Thank you. The next question is from the line of Girija from Smith Limited. Please go ahead.
Thank you for the opportunity. So many of my questions have been answered, but just wanted to check what is the average pricing in the central region in July so far, and is this stable or lower month-on-month basis?
When you say, can you please repeat your question? I don't think I've understood it properly.
Okay. So just wanted to check, like, what is the average pricing right now in central region in July so far, and is this stable? The pricing is stable, or is there any decline in pricing on month-on-month basis, June, July?
Are you talking about the industry, or are you talking about Heidelberg?
Heidelberg.
So, as we look at July, we should be in the ballpark region of around 4,900 rupees. And
so pricing in the sense, I'm asking the pricing, cement price per bag.
No, that, there is no one answer because the prices vary from every district.
Okay.
Yeah, so I'm talking about per ton, and we are maybe around 50 rupees odd per ton, 50, 60 rupees odd per ton lower than June right now.
And what is the difference difference pricing between this grey cement and this premium product, premium cement?
Well, we have a few premium cements. We have a couple, and the difference would be anywhere between 10 rupees to 40 rupees a bag.
Okay.
Which is around 200 rupees to 800 rupees a ton.
Thank you, sir.
Yeah.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah. Also, just wanted to clarify, we mentioned that we want to do a 70 crore capex for 15 months for AFR and 55 crore regular capex. So is it fair to assume that 100 crore, 110 crore kind of a capex we see for FY24?
So we mentioned a 70 crore number for an expansion capex, which is around 200,000 tons of cement. Which is going to come in the next 15 to 18 months. And of course, there is a normal maintenance capex and operating capex of about 40 to 45 crores.
So, sir, financial year 2024, you will have this 40-45 crore rupees. Of course, this will come in the same fiscal year. And 70 crore rupees will split into 2 fiscal years.
Yeah.
So some part will come in 24, some part will come in 25.
Correct. Yeah.
Okay. But you mentioned that this debottlenecking to start by December 23. So this 70 crore what is a different from the one we need to spend on the debottlenecking.
So 70 crores is the debottlenecking.
Yeah.
Okay, but debottlenecking will complete the debottlenecking by this December, and the capex you are mentioning that it will spill over to FY25. Is it so?
So, Savan, again, we can repeat what we actually mean to say. The 70 crore rupee debottlenecking project will start in this calendar year 2023, and then the total capacity not going to happen that 200,000 ton cement is coming in December 2023. It takes around 15 months time, so the benefit will come in financial year 2025.
24, yeah, 24, 25.
Okay. Sorry, sir?
Shravan, is it now clarified?
Not 100%. Still, I'm confused. So simply, what would be the total capex for FY24?
It will be around 75 crore rupees. 45 crore rupees is the sustainable capex, and the 30 crore rupees out of debottlenecking. So 70 crore. That's why I'm saying that is debottlenecking project is started now. So in financial year 2024, around 30 crore rupees will come from out of 70 crore rupees, and the remaining 40 crore rupees will come in the financial year 24-25.
Oh. And just to clarify, our total grinding capacity is 6.26 million ton. Will you please help me in terms of the plant-wise? Though I just wanted to clarify because we mentioned that Karnataka plant capacity is 0.4 million ton. Actually, I have a number of 0.51. So in terms of the Damo, Jhansi and Karnataka, if you can split the grinding capacity.
So in central India, it is 5.75. You rightly said that 0.51 is the Karnataka. So it is split into the two locations, 5.75 and 0.51. 400,000 ton, we are 0.4 million of Karnataka. We are talking about the grindability. We need to see that, okay, how much we can displace from the plants. So rated capacity 0.51, we can displace 400,000 ton. And here in central India, it is 5.75.
Okay, and in terms of the clinker, Damo clinker capacity, is it 3.5 or 3.1?
3.1.
3.1.
3.1. And Karnataka, what's the, it is a 0.3.
0.3, but at this moment we purchase clinker, we don't produce clinker there.
Okay. Got it. Thank you. All the best.
Thank you. Ladies and gentlemen, this would be the last question for today, which is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, sir. I have two follow-up questions. First, could you share what was the clinker production in FY23 and in Q1?
Clinker production. I think we have already given this total cement production in our press release, and we have been consuming around 62% of the cement as a clinker.
Sorry, 62% is what? Clinker factor.
Our clinker factor.
Okay. And in Q1, what was this number, clinker factor?
Q1?
Yeah.
Clinker factor more or less
is the same because we don't manufacture OPC cement. It's all 100% PVC.
Okay. And sir, you had started this digital strategy whereby you had started through WhatsApp, reaching out to dealers, live pricing. How is that working out, sir?
It's too early to say. I mean, we are in the midst of a new program that we have launched ourselves, and we have so digital. All we can say is digital would be a significant part of our strategy going forward, and this will not only be through messaging; it will be through various channels.
Okay. No, because this WhatsApp, which I think 2-3 quarters back, the management exhibited also. So what we notice is the pricing which it shows for different pin codes is at least 5 to 6 months backdated. So just wanted to check if there is any focus over there, or it is not being pursued aggressively.
I'm sorry, but your voice is not very clear. Can you just
please.
And repeat the question?
I'm sorry. Am I audible now?
Yes, better. Yeah.
Okay. So this digital WhatsApp based, where you could, for different pin codes, you could check the pricing for different brands of Heidelberg cement. What I noticed is that the pricing which is being displayed on the WhatsApp is 5 to 6 months. Like currently it shows February pricing. So just wanted to your view that are we pursuing this digital thing at least from the customer facing WhatsApp and all aggressively, or you have a relook on that?
No. We are in the process of a complete revamp in our digital strategy. Pricing communication through WhatsApp is not something that we are pursuing right now. But we have a very holistic approach to digital communication and marketing, which I'm, as of today, not in a position to reveal. But once the entire program is in place, then maybe at a future date we can talk a little bit more about it. It's not going to be only focused on WhatsApp. It's going to be on our entire CRM and different social networking channels.
Great, sir. And this is all from me. Thank you. All the best.
Thank you.
Thank you. As that was the last question for today, I would now like to hand the conference over to Mr. Vaibhav Agarwal for closing comments. Over to you.
Yeah, thank you, Michelle. Sir, before I close the call, I just have one question for Joydeep, sir, in particular. Sir, firstly, best wishes from all of us at Phillip Capital as the new MD of Heidelberg Cement in India. So I just want to know from you as you take charge of the company for Heidelberg Group in India, what would be your vision for the group forward in India, and have you already identified any areas of incremental improvements which you can do for both, as in the entire group, of especially HCIL, as we are referring to HCIL on this call, and any change of stance from the earlier leader, or anything which you can say that you can improve on further? I just want to know your vision for Heidelberg Group in India, sir.
Okay, so no, there is no significant difference in our stand. We are a company which remains steadfastly focused on reducing our carbon footprint. So that is obviously at the core of our strategy, and that is why you see us in the relevant market. If I were to start producing OPC and push it out in the market, my volumes would suddenly start looking very good. But we have intentionally stayed away from that, because that's something which, as a company, we, at least in this market, are very averse to. If you look at our carbon performance, we are pretty much up there with the best in the industry, and we would like to ensure that we continue on that journey. So that's pretty much at the core of our DNA and company vision. As far as the company performance is concerned, we have done well in this quarter. We would like to continue doing well, and there are various initiatives that have been taken in reducing our cost of manufacturing, as well as achieving excellence in all our commercial functions and in sales and marketing. And right now, that is our focus. We would like to establish ourselves as a ethical and environment-focused company, achieving excellence in our operational and sales activities. But to answer your first question, no significant departure from which was in the past. There are only some certain strategic and tactical initiatives that have been started by me, and we would like to see over the next 3 to 4 quarters what kind of results they yield.
Sure, sir. That answers my question, I think so. All the best, sir, and thank you very much once again for the opportunity of the call. On behalf of Phillip Capital India Private Limited, I would like to thank you and Heidelberg Cement India Limited for the call, and also many thanks to the participants joining the call. Michelle, you may now conclude the call. Thank you very much, sir. Thank you.
Thank you.
Thank you. It's been our pleasure.
Thank you very much, sir. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.